It's time once again for America's most peculiar and obviously already outdated rituals that we gather around the campfire and watch one old man dictate the future of our supposedly free capital markets. Yes, we're here again where we watch the CPI data, essentially tracking inflation in the consumer price index, and we get to find out whether old Jerome Powell and his hawkish Fed are actually succeeding at controlling inflation or whether they need to turn up the volume and be even meaner to the economy. So I'm going to save you the pain of having to go through and analyze this complex minefield of data and give you my outlook on what's going to happen tomorrow as the CPI data is read. You're definitely going to want to watch this before you make any moves in the market today. And as always, I'm going to give you my 2 cents on what's going on across the entire markets. That's right, I'm trying to get back to daily, if not rapid fire content here, keeping you up to date through the entire bear, and then also doing the deep dives on some of the crazier stuff. If that makes you excited, go ahead, destroy that like button, and let's jump in. As Mr. Simon Rees says here, prices across markets are quiet as we hear FOMC speakers talk of higher for longer rate policy and wait for markets' reaction to CPI. That's tomorrow. Equities are embracing a risk tentatively. This is the other thing. As we start off the new year, equities have been having some risk that they're taking on. We had a nice little green streak in both mainstream and crypto markets. Again, the big question is this yet another rug where we rally up into a catalyst? And during a bear market, catalysts are typically to the downside. So you're rallying up, creating more steam and more room to run to the downside. This is precisely how the market psyop you. Of course, the other side to this is we've passed peak inflation. The Fed will ease up. We'll see inflation drop. Here's the point. USD is getting sold while bonds are getting stuck. I have to think that CPI is going to come in cool tomorrow. Let's just take a minute and recap why we're here. The Fed has been crushing interest rates, trying to tighten the economy to crush stock prices, asset prices, and effectively lower inflation so that things are cheaper when you spend your dollars. That worked gloriously with this huge run up in USD, but we haven't seen sticky inflation drop. But some analysts are saying because of how aggressive this has gone, that not only should we see inflation drop, but we'd actually see it go negative because it was so high throughout 2022 that we could have months where, say, it compares from, June of 2023 to June of 2022, we might see that inflation actually dropped. It didn't just cool slightly, but it's actually negative compared to the other months. So it went from 9% maybe to negative 2%, something crazy like that. Now, I want to be very clear. Inflation dropping is not the same as inflation slowing. When you see it forecast that we'll have 7.2% CPI and instead we have 6.9, that's not negative inflation. That's just inflation speeding up slower than we wanted it. Okay, just to be clear. Going back to Carlo Cassio, he points out here, the stock of consumer savings is still way above pre-COVID and homeowners' equity is at all-time highs with unemployment at all-time lows and disinflationary impetus supporting real disposable incomes. Market being offside of Fed on 23 cuts is setting up for a bloodbath. Effectively, he's saying the market is positioning around Fed cutting rates in 2023 and being nicer to the economy instead of what we do think is going to happen is that they're going to be meaner to the economy. It's been pretty clear that the Fed has a credibility issue. And with that credibility issue of the Fed saying, hey, here's what we want to do, and then the market literally just saying, yeah, well, we don't believe you, that comes from a long history of the Fed essentially not doing what they said they were going to do or acting in a way that the markets felt like they could really predict and divine what the Fed was going to do, which is essentially be super soft and dovish over and over again. It saves pain from the economy. It's politically popular. And we've ended up with a situation where Wifey, one of the most respected but albeit super bearish commentators in the space, Wifey has said ETHUSD has flipped from 6 out of 10 bear to 6 out of 10 bull on the trends and Momo. Signals are from 2 weeks to 12 months. Short-term trend and momentum indicators are flashing 5 out of 5 for bullish price action. Again, no one can predict the future. I'm not saying ETH is guaranteed to pump. I will say I did get off the sidelines a bit. I'm not doing crazy stuff like 1 to 2% of my portfolio, small amounts of money, playing around with NFTs and stuff that I think are interesting, getting into new communities and having a little bit of exposure. It made me feel alive again. Psychologically, it was just nice to be in the markets. And I've accepted that some of this might go to total zeros. That's a total side rant. I'm not advocating that the bottom is in. In fact, I think it's unlikely. However, it does feel like if we do get a soft CPI print here and we don't see this recession that's being predicted far and wide manifest for the next few months, or maybe even for the next 6 to 12 months, that there could be a period of short-term interesting price action in the markets. For me, it was part psychological just to be a part of the markets again, kind of just got me mentally excited about things again. And I felt the light come back inside me as I've been so heads down building stuff. It's nice to play again. So that's what I mean by a Fed credibility issue, is that they're saying they're trying to be super harsh on the economy and the market's essentially just saying, we don't believe you. So let's see what happens. Maybe this will add to more CPI inflation. Maybe this is setting up for the absolutely worst crash in the history and this is a big epic tragedy being painted right in front of our eyes. But I'll give you actually what I think towards the end of the episode. Now, I do want to say if you're enjoying this episode, I always do this at the end of the episode, but if you're enjoying and getting value out of these, and this is helping you see through the crazy web of macro and micro and crypto native, mainstream markets, NFT stuff, go ahead, please like this video and make sure you subscribe, as we're going to be doing everything we can to bring together all the sources of information to help you see through the absolute fog of war that has been the markets in 2022 and 3. In other massive news, we've also seen FTX apparently recovered $5 billion in liquid assets. Now, we've heard that their gap, their hole that they're going to owe to their creditors or people who had funds trapped on the platform was $10 billion. So the question is, does that mean that they're at 50 cents on the dollar? What are they actually going to get back for those assets? What are those assets? So many questions, few answers at this time. But in theory, people being made 50% whole from FTX could be a massive, massive win. So fingers crossed right now, and hoping that the story develops positively in the future. Also, with the FUD about Digital Currency Group, Mike Novogratz, one of the biggest billionaires in crypto, is saying, hey, look, even if all this stuff boils over, it won't translate to market selling a lot of assets. You see, that's what we all worry about, is that there would be some kind of process by which companies have to restructure, and then there's some fire sale of assets that tanks Bitcoin and crypto. Like what we saw effectively when Luna collapsed, and they were effectively market dumping the heck out of Bitcoin and everything that they could. That created a spiral effect. With other companies like DCG, usually these will happen off the markets in private auctions, over-the-counter trades, that kind of stuff. So again, the FUD storm that we're experiencing right now might not actually translate into a crash in prices. I want to reiterate over and over again, I've believed that the macro is what's dragged down crypto throughout 2022. And if the macro sees a massive crash in 2023, that's going to absolutely hurt crypto, and Bitcoin in specific, which is the most tied to the mainstream markets, which then acts as a liquidity feature being removed from all the other markets. So things crash when Bitcoin crashes, just the way it works. Understanding that the worst news in the world around FTX didn't actually crash Bitcoin's price. In fact, we're higher, I think, in price than when the FTX news was unleashed about their bankruptcy. And why? Because macro is kind of in the same place it was. So looking at the macro, until we get this recession crash, horrific storm, the worst bear market of our lives actually playing out, where effectively all of this recession fears are manifested, I think we're in kind of a holding pattern. I'll give you my full opinion here in just a minute. Because these headlines just keep coming in. US banks are prepared for recession. BlackRock beginning massive layoffs. World Bank warns of massive global recession in 2023. We also did get some cool headlines, like apparently the US House Republicans are voting on a bill to abolish the IRS and eliminate income tax. They've officially gone rogue. It actually made me a little bit sad because we heard that they voted to pass a bill to effectively cut funding for the new IRS agents. And now if they pass this, I'm just wondering, probably none of this is going to get done. I mean, let's be honest, this is all entertaining. They're printing money to fund everything anyway, so all of a sudden the concept of income tax starts to make less and less sense. Let's be clear, the CPI print tomorrow is everything for markets. If it comes in cool, then markets will probably rally. Not like crazy, but this short-term bullish momentum will probably continue. If it comes in hot and unexpected, we will probably see the markets dramatically offside here, and that will mean we'll probably see some serious downside action. This is why I don't think there's a huge amount of advantage in being super overly allocated to the markets. Being patient, understanding the x-axis of time is the thing that we need to respect still in 2023. Now, I mentioned a few times I've been dabbling a little bit, buying some NFTs, having a little bit of ETH. I'm not going crazy. It's just more of a psychological thing for me to start being in the market a little bit in a way where I feel kind of like involved with the pulse of crypto again. I'll reiterate, if it goes to zero, everything, I'm still not heavily allocated. 99% of my funds are still not allocated. With that in mind though, I do think that there's just too much of an expectation of a recession being overly dramatic, crazy, cataclysmic. And I'm not saying the recession won't happen. In fact, it seems almost guaranteed that it does happen. However, the big gotcha here is timing. When will that recession happen? Because if it doesn't happen in the first half of 2023, maybe it doesn't even happen in the second half of 2023. Maybe it doesn't happen until the second half of 2024. And in that time, what could happen in markets could be actually pretty good. As long as there's no big black swan dagger from mainstream markets, I think there's a bit of a floor being established, at least temporarily, in crypto. And what do I mean by that? I mean, the thing that makes crypto beautiful and great is the people. And we all know that more users rush in the bull market creates more valuations, higher ballooning, excitement, FOMO. Well, guess what? During the bear markets, we're never quite sure how many people are going to leave crypto. We know a lot of people do. We know search terms are down, activity's down, chat rooms are down, views and comments and likes are down. So if you could please help smash the like button, I appreciate it. But at a certain point in a bear market, people accept the bear market. They accept the long-term vision. They adopt a long-term mindset. And I believe after 2022, the people still still here, probably 90% of the people here are going to stay. So from a community standpoint, we've probably hit our floor, which means interesting things can happen as that community starts to gather around and kind of centralize their attention on the strong projects. That's why I've become interested. Again, it's just a theory. I could be wrong, but my spider senses are tingling saying, hey, look, we know the economy is going to collapse at some point, but we don't know when. And if it takes a year or 9 months or 18 months for this to actually happen, in the meantime, there might be some really interesting stuff that happens in crypto. I'm keeping an open mind. I'm not saying to take bets. Again, if you are going to take bets in the market, you need to take responsibility for your bets. I am not here to tell you what to do. I hope after the craziness of the last year and a half, 2 years in crypto, you're owning every decision you make. The only way you can truly improve is to take radical ownership over your decisions in this industry. Also, just a quick note, Imposters is having its first playtest event, its first beta event of 2023. The community's been on fire of late, and we're doing some really cool stuff. I'm going to be helping people in the Discord learn to make videos. So if you've ever wanted to become a YouTuber or a content creator, we're going to start investing time and resources into cultivating the content creators from in the community. It's been really awesome to watch one of our community members hit 10K subs on YouTube already. So it's happening. We're transferring the skills that I've learned over the last few years to the community, and it's just a really, really fun place to be right now. It's just a quick note. As you guys know, I'm super passionate about the projects I'm building. We've been moving faster than ever over the last few months. I talk about it a lot more on Twitter. So if you want to know more, check out my Twitter and check out my Twitter spaces where I have a lot more chance to go into detail. Now, the Imposters floor has been growing pretty aggressively over the last few days. And so for people who might not be able to afford it, but want to participate in it, if you make a profile on Gigamart and comment your profile here below this tweet, make sure to follow EllioTrades on Gigamart. In 24 hours, I'm going to give out an Imposters Genesis Alien to someone who comments their GM profile. It's totally free under this tweet. Of course, Gigamart is part of the Superverse ecosystem. It's a product we've worked really, really hard on. Zero fees there, totally free to use. We'd really appreciate it if you checked it out. As always, I'm EllioTrades. Thank you so much for being part of the journey, and I'll see you very soon on the next episode.